Hello, today is Wednesday, the 28th of January, 2009. It's Brian Shannon here from alphatrends.net. We had a big day in the market today. In fact, the NASDAQ is now up on the year. So, we've been seeing some of the evidence mounting. These haven't been guesses here that the market might have a rally in it, but we've been looking at some evidence based on the shorter term time frames, which we'll look at in a moment. Here in the daily time frame, you see we did have a little bit heavier volume on the NASDAQ today. Not as big as you'd like to see, but more importantly, we did get above the 2960 level, held above it very decisively, and finished with a nice close above the daily VWAP as well. So early on, we saw the market gap higher, kind of struggled with this daily VWAP. It looked like it was going to break out, pulled back to the daily VWAP, and then from there, we had some nice higher highs and higher lows. This is where the Federal Reserve this is when the Federal Reserve made their policy announcement, and basically you can look at it as it got sold into, but I think more importantly is the fact that we did maintain above daily VWAP, meaning that the average price that people paid was down here at about 30.24. So generally there's good feeling from the people who bought today. Looking at a 30-minute time frame, I had pointed out on the blog earlier when we were approaching the 2/3 retracement of the yearly, the range for this year, that is from the January 6th highs to the recent lows. And when I point these out, it's just only a potential area to look for evidence of selling or something like that, not necessarily a call that, hey, you got to sell here, but tighten your stops. It's a potential level that other people may be looking at where a new supply may come into the market. So we saw the 2960 level was taken out on the gap early on, and then of course we saw the intraday action and what happened in here. So you could make money on the long side by waiting for the buyers to retake control, test that VWAP, and then push higher with this heavier volume. So we're looking back at this 30-minute time frame. We are short term, probably a little extended in here. We got up to basically not quite to these highs here, but we had been also looking at the inverted head and shoulders pattern. We'd seen that 5-day moving average touch his support right here, just as we saw that when the market was reversing from this rally, it broke down, tested that 5-day moving average, then hit lower. This time it rallied above that 5-day moving average. The 5-day moving average flattened out, and the market held support there, and now we're rallying once again. So we're seeing encouraging signs here. I think right now, as far as potential support levels, 30 is not only a round number, but it's also this high right here, which was also this low, and we can take it back a little bit further here. So we'd seen resistance, support, and resistance at 30. So maybe we can see that 30 level hold, but the more important level here over the next few days is going to be this 2960. Not all gaps get filled. Don't wait for this gap to get filled before you purchase. A lot of times they will get filled, but not sometimes not for years on certain gaps. Not necessarily this one, I don't think, but we've got this gap here. Let's see if that holds the $30 level. Again, the market came down just below that VWAP, but recovered nicely above it here today. So you got to be encouraged with today's action here, and hopefully you were able to participate in some of that upside. As far as the bigger levels go, well, on the daily time frame, we had the election right here, and these are the lows from last year. So that 2/3 retracement, that's about where we got up to as well today. So that continues, that $30.80 level continues to be an area where there's a hard-fought battle. Let's see if the market can recover and get back above that over the next few days. It would be nice to see the market consolidate here rather than just run away, but any pullbacks we want to see basically be controlled from here. Oil, like I said yesterday, oil's broken. There's no edge trading in here, so I'm not really going to talk about that one today. The Russell 2000 was up $1.87. It is still down on the year, not much though, but we're back above the 50-day moving average in here. Again, we saw heavier volume than what we've seen the last couple of days, but it would have been nice to see a much bigger volume push. More importantly, though, the only thing that pays is price, and of course, we did get above that $46, this $46 level right from the open. Same basic pattern that we'd seen in the Qs. The market fought with this daily VWAP, and then pushed back above it with some volume, and then we saw the higher highs and higher lows and big volatility that's typical after a Federal Reserve announcement. So looking at the Fibonacci levels in here from the year high, we can take a look at that high to this recent low. You can see we came up to about the 50% retracement level. Also, you can see that this area here, just at about this 47 and a half area, had been prior resistance, which turned in support back into resistance. And so this 50% retracement at about 47 and a half seems to be important. The next test, we would look for this prior support level, which is coincident with the 2/3 retracement. That's at about 48 and a half on the 10-minute time frame. We'd like to see support hold here, ideally at about 46.70, but I think that also down near about 46.20 or so is going to prove to be important here the next few days. The financials had a big day as well. They were up 12%, 12.8%. Still down significantly for the year, though, down more than about 17% year to date, in spite of a one-day 12.8% rally. And it continues to show why this is truly a trader's market. Here on the daily time frame, we've got an obvious trend line that actually could have extended back to there. This trend line becomes a potential upside target, as of course we had seen this $11.40 area be very, it was very important as far as that's where this market broke down from earlier this year. If we look at the retracement levels in here, we did manage to see just about a 50% retracement of the year's range. Not quite up to there, but we also see that this is a level because it had been prior support, which turned into resistance right here. We blasted, obviously, right past that $9.40 level early on, and same thing here. We'd seen declining VWAP initially, then we saw a higher low and then a higher high on this 1 minute time frame, and from there a real nice trend emerged. And in here, actually, we finished right near the highs of the day. So the financials showed a little bit of relative strength, not just on a percentage basis, but in terms of closing up near the highs compared to some of these other groups. Potential support levels, well, we've got this area that had been, resistance or lower high on the way down, and that turned into basically where the battle was fought in the first half hour or so, first 20 minutes of the day. So this level will be important for the market to hold at 987, and then we can look down here at about $9.40 is our more important level. Potential upside. Again, we've got that 10.5 area that it looks like will be important. Above that, the 2/3 retracement at $11, but more important is that $11.40 level, and that's still quite a distance away. Not looking like it had, the market can maybe do it, but no predictions here. Let's just focus on what price action is telling us. And we saw much nicer volume in here as well. So the financials were the recipient of some news. But maybe we're getting a big short squeeze rally that might set us up for another potential short. There's no evidence that it's time to be selling this short yet, though. This momentum is simply too strong to short. It just doesn't make sense right now. If you're going to make bets against something, then do it with puts. Buy the February 10 puts. At least you'll know what your risk is. I'm not suggesting that as a trade because I don't think it makes any sense to have short exposure for short-term traders in here because the momentum is so strong. But if you're going to play it, that's the way I would suggest you do it. The S&P 500 got right up here to this 50-day moving average, basically a conjunction of the 20 and the 50-day moving average. A little bit heavier volume in here, but really just about average as compared to the last 20 days. This moving average I have on volume is a 20-day moving average of volume, and I don't use it for anything other than just basic comparison. I don't have a system that's based around it or anything, just to give me an idea of what's kind of been normal recently. The important thing here, though, is obviously this is I've been stressing the importance of 86 as this prior support, which was resistance. We're firmly above that now, so that gives the bulls a little bit of breathing room, at least for a few days, I think, and we'll see if we go down and test that level. But it again was a very important level. We've seen the evidence in here also that this market was resisting going lower. It found support at that 5-day moving average that flattened out. It started turning higher yesterday, and the only thing that had been missing is volume. But again, I'm going to tell you that only price pays. Volume gives us reason for concern and to be suspicious, but it doesn't mean that you want to fade a move because of it. This level I just drawn in here, about 86 and a quarter or so, will be important as well. That's where we've seen not only the gap lower over here, but of course the gap higher today. If we look at the 1 minute time frame, same little battle being fought here. Lower highs and lower lows, and then the market made these higher lows, confirmed it by holding above that daily VWAP and pushing. This market not quite as strong as some of the others, but still obviously a very good day, up 3.3%. If we look at that 30-minute time frame again, we'll take a look at the let's take a look at the height of this pattern, because this gives us an approximate upside projection based on the inverted head and shoulders pattern. For some reason that didn't hold, but that gives us a projected upside near about that 90 and a half or so right in here, maybe 90 and a quarter. And you can see that's a prior important level as well. This prior support did act as resistance here, so I think that makes sense as far as if you're looking for an upside target, that's where it potentially could go. It doesn't mean I would be a buyer of the S&P 500 and look to sell it up there, but it's also maybe a little bit lower than that. We've got, so this was at what I said, about 90 and a quarter or so, but below that we have this 2/3 retracement level as well, which comes in at about $89. That had been this lower low right in here. So prior levels of support tend to act as resistance. That also is the location of the 2/3 retracement, so it adds a little bit of technical significance to there. But all in all, we had a good day. We've got these higher highs and higher lows. We want to see these levels in here hold as far as support on pullbacks go, and hopefully any pullbacks that come do so on diminishing volume as well, and that could pave the way for a little bit further upside here. We're obviously still in the context of a brutal bear market, but starting to turn a little bit more neutral here, maybe on the weekly time frame.